Wouldn't it be great if there was an easier, simpler way to read the market so you can make more consistent money where all this emotion is not going to throw you off? Well, today I'm going to cover with you where you don't need to reinvent the wheel, and I call it the Rubik's Cube philosophy. There's going to be 5 steps. I'm going to cover them step by step, and I'm going to cover them here, but then we're going to go into a live chart with Ethereum, and we're going to use this as the example because there's some particular patterns that you want to be aware of, but it's the longer term lesson that you can use time and time again. So if you like today's video, like, subscribe, hit the bell notification, and let's dive straight in. So with the Rubik's Cube, it's referred to as the world's most impossible puzzle. And even when we jumble it up, what you want to know about this and the correlation to trading and what you can really learn from this is that there is a method to this madness. And it's the same with trading. There's a first step, a second step, a third, fourth, and a fifth. And if you can apply that consistently, you should make consistent money from the markets. So when it comes to trading, it's called double time frame momentum, which we're going to dive into. But with the Rubik's Cube, the first step is getting the cross. So I'm actually going to get this white cross as you see on the screen right now. And it's the first key step that we want to be doing with the Rubik's Cube. Now, what I've realized over time, with my experience, I've been trading for over 15 years, is everything is difficult before it's easy. But here we can see we've got this first step of the cross that looks the same as the screen. So now we're going to move on to the chart itself. So let's go to Ethereum and do this double time frame momentum. What the heck is it and what does it mean? So the first thing we want to do is we want to measure rate of change, and we want to use a momentum indicator that helps us see what is happening. And I like to use a double time frame, which means a higher time frame and a lower time frame. But to keep things simple today, what I'm going to show you is something called the stochastics RSI. It's this over here, these blue and the red lines. And what we want to know is that the highs and the lows, these highs over here, tend to correlate very nicely with these price highs over here. So it gives us a nice clue on what's likely to happen, because when this is pointing down, look what the price tends to do. When this is pointing down, what the price tends to do. And now this is pointing which direction? Down. So what should we anticipate with the price? Well, it's going to be sideways to down. Right, so that's the first piece of information that can really help us see where the price action of Ethereum is likely to go. So that's step number 1. But let's move on to step number 2. And let's just reset this chart over here. So we've got the steps building out as we are unfolding the steps one by one. So the second step with the Rubik's Cube is called the first layer. And we want to complete this first layer where we get these corners matching up. Now, if you don't know the algorithm, it is actually very difficult. But once you know the algorithm, all of a sudden, the method behind the madness becomes pretty obvious. And as you can see, we've just done the second step, which is getting this layer, and it's called the first layer of the Rubik's Cube. When it comes to trading, the second thing I like to look at that has really helped me and served me, and one of the best things that I found, is reading crowd psychology, something called Elliott waves. And there's a gentleman called Ralph Nelson Elliott, hence the term Elliott waves, and he figured out that the crowd psychology in the markets are quite repetitive, and the markets tend to move in 5s and 3s. We want to be constantly looking for 5s and 3s that correlate with the momentum position that we saw earlier. So let's go back to Ethereum, and let's just see, can we see any 5s and 3s in this market? Now, if you're not used to looking for 5s and 3s, it might not be as obvious initially. Sometimes you can put the line data and then you can go, is there any 5-wave counts? Is it like a 5-wave count on the upside initially? Well, let's draw this out. So what I'm looking at is we got a low over here, we got a high, so that looks like a wave 1. We got some type of pullback, which looks like a wave 2. Then we got the next move, which is a wave 3. This looks like a nice ABC of a wave 4, and looks like a final impulsive move of a wave 5. So when we see a 5-wave structure, what typically unfolds next is at least a 3-wave correction. And hear my words, it's typically, most common, highly probable. So typically we'll see some type of move, at least a 3-wave, and it's normally bigger than any form of correction. So now let's just draw this on. I'm going to do it relatively fast. And again, with practice, this gets easier and easier and easier. But again, like with anything in life, most things are difficult the first time round. I'm actually just going to make the lettering a bit bigger. We're using TradingView over here. and it just makes it a bit easier for us to see. Right, so now we've got a 5-wave count, but we also want to look at what's the more recent price action. Is only 5s and 3s. So this is really important when you can look at the market in a particular way. I'm going to cover just something a little bit advanced, but it'll give you some key piece of information. The market has closed into the former range of this wave structure. That's normally an early indication that the selling pressure is strong. And we've also seen a big move to the downside that's bigger than any former move to the downside in this last part of the wave sequence. So that also indicates that the price is likely to continue down. So we've got momentum indicating down. We've got a 5-wave structure, which is often the end of a trend and a correction is due, indicating down. And now we're going to look at this bit to see what does this look like? And is there any clues that can help us analyze the market in an objective, non-emotional manner? And by the way, if you're liking this content, like, subscribe, hit the bell notification, because I want to help you make money consistently from the market, but be able to think in a logical, non-emotional way, because there's so much FOMO and so much FUD, especially in the cryptocurrency space, and you need to be able to raise above that noise so you don't get influenced by your emotions, which is fear of missing out and fear of making mistakes, fear of losing money, etc., etc. So let's just now dive into this market, part of the market here. I'm going to cover something a little more advanced, because we saw the 5-wave macro count, but then there tends to be waves within the waves. So we can go to a 1 degree lower, and I'm going to show you what I mean by this. So we've got this move to the downside over here. And the 5s and the 3s applies to the downside and the upside. And what I want to show you just very quickly is if we just look at this, it looks like a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. And then it looks like we've just had some type of ABC correction. So what typically occurs after an ABC correction is a follow through to the downside. And that's supporting the momentum position. So this is like the thesis that we're thinking about with Ethereum. So let's just now quickly draw this on. Again, once you've practiced this a load of times, it doesn't take long at all. We're talking about literally minutes. And let's just make this a different color so we know it's a lower degree wave count. We're going to do it in blue. We'll make it minor. And we'll just do the ABC correction as well. It looks like some type of A, B, C correction. Let's also just make sure this is a minor as well. So it just looks the same. And we'll put on the waves so we can see what we're thinking. I just want to make this a little thinner. Here we go. So now we have the most recent pattern position, or the high probability pattern position. There is something important that, again, I want to bring to your attention. And it's this. The price has closed into this former closing range. It's called a wave overlap, or a pattern reversal signal. So when the price closes into that range, it's normally an early indication that this high is likely to hold, and this high is likely to hold, especially if the price ends up going below this point over here. So Ethereum is looking bearish right now. But keep in mind that it's based on objective information and no emotions involved. We're just looking at, it's almost like pure math, but we can get really clean thinking, right? So it makes sense so far. So we've got momentum. We're looking at this, which is supporting that is likely to go down. We got this bearish reversal over here. The weekly is still also bearish, but we've got this A, B, C correction. So this is really significant information because there's two key technical pieces of information that's really indicating strongly that we're likely, not guaranteed, but likely to see a follow through to the downside. So now let's go to step number 3. So with the Rubik's Cube, now that we've done the first layer, step number 3 is getting the second layer done. The second layer involves a particular algorithm, which is pretty mathematical actually. There's not actually much thinking required when you're doing the second layer of the Rubik's Cube. But when you've practiced it quite a few times, it gets easier and easier and easier, just like with most things in life. And then we're going to do the final step after this, or 2 more steps with trading. But now with the Rubik's Cube, we've got the first 2 layers done. What's the next step when it comes to trading? Well, for me, it's Fibonacci price. The wave structures tend to have a relationship to one another. And if we can see that ahead of time, we can see what's highly probable likely to happen next, because it's all crowd psychology playing out. and knowing that the fundamentals of the market are driven into the price. So I want to focus really on the recent, like this part of the market right now, because this is where we're going to take action. This is decision-making time. So what I want you to know is a couple of things. We're going to do three. Actually, we'll do three. We'll do three Fibonacci ratios. And again, this is helping us measure in a non-emotional way crowd psychology, which is what drives the markets. Any advanced trader knows that psychology is what drives the markets. It's speculation more than any other data, and the fundamentals are baked into the price. So what we're going to do, I'm going to do it relatively fast, is when you see a 5-wave move to the downside, and it's pretty clear, you typically get a retracement, and it's normally 50, 62, or 78.6%. So let's just quickly draw that in. By the way, below, I've got some reports and some free training. You can check it out. It goes into a bit more detail on this as well. So don't worry if this is going over your head slightly. You can check out my free training. It's in the link below in the description. So this is the first thing. So we can see that the price has hit the 62%. So let's just actually, there's three ratios, 50, 62, and 78.6. The 62% is what I want right now because it's relevant, because it's the one that's really been triggered. So that's the first ratio. But we want to get a cluster of the ratios, and ideally they're overlapping or close to each other. That gives it more relevance. So let's just do the second. It's called an external retracement. We'll do the extreme price zones. It's called measuring wave B. I won't go into too much detail. You'll just see the key ratios that we want to be aware of. And we can see this one's got a cluster. So this makes it really significant over here, right? And we can even just get rid of this one for now because we can see that it's likely not going to get reached. And then the third one I want to do, and I want to just quickly explain this to you, is wave A and wave C are like siblings. They're very similar in some way, shape, or form. Not perfectly identical, but similar. So you got this move to the upside, and it tends to equal the next move to the upside. Waves A's and waves C's tend to be very similar more often than not. So we can just quickly measure this. So we literally just measure wave A. We'll just measure this peak, even though it's a wide bar, and then this one here. And we've got the 100% external, so what do they call it on TradingView? TradingView calls it trend-based fib extension, 100% trend-based fib extension. So what this is now telling us, and we can do this ahead of time as well, by the way, is this is now a key Fibonacci price zone. So now we've got three key pieces of information telling us this is highly likely to hold as a top, and we're likely to get a follow through. We got momentum, we got pattern ABC, and we've got price, right? So that's three things now. These are very significant things, and you'll see this play out time and time again. So let's now go into step number 4. So with step number 4 with the Rubik's Cube, it's getting the top layer done. And with this particular one, there's a few different ways of doing it. I'm going to do it in this way actually. There's a couple of different algorithms that we want to be paying attention to. Sometimes you see a pattern that is really, really cool. So this particular pattern, I know the algorithm for. So when I see it, I know I can just go like this, bang. So we've got the 4th step done of the Rubik's Cube. The 4th step, what I like to look at, and sometimes you won't get all 4 in trading, is Fibonacci time. There's key minimum, maximum time zones that can be very, very helpful to give us a date. Almost the same way we saw in price, we can actually do with time, which is really, really important and powerful information. So the way I'm just going to quickly do this, just to make it a bit easier to see, is just clean this chart up for a second, is what we want to know is if we measure how long it is taken to do the move to the downside, we can project, it's called a Fibonacci time retracement, how typical it is for a correction to complete, and we're going to project those in a second. And then we can also measure the relationship of how many days did it take for this wave A to unfold, and project forward the same amount of days, and want to see if we get a time zone. And that will help us to have a price zone and a time zone combined with pattern and momentum. If all 4 coincide, then it's highly probable that the market will respond in kind more often than not. And what we want to do is get the edge in our favor, identify that edge, and then play out. And play out, make our decisions based on that edge. So let's just now draw that out, bringing back the other lines on the chart. If I can, there we go. And we're just going to do this retracement. We're going to take this high, and we're actually going to take this low here. And there's three key numbers that we want. That's most common and most typical: 38, 62, and 100%. So what you want to be aware of when it comes to time retracements, this is the typical minimum. Like it should go beyond this. If it doesn't, it would often indicate that the correction has not ended. This is the typical maximum. And if it goes beyond this, the next ratio is this number over here. And this will be at a typical maximum. It can go beyond, but if it does go even beyond this, it just means the correction is due to end soon. It's almost like a bus is due to arrive at a certain time and it's gone beyond that time. It's like, okay, the bus is running late. It's due to arrive anytime soon. So now let's just look at these. So now we've got this cluster, and I like to just draw a box. Just draw a simple box like so. And as we can see, it's literally been bang on this day over here. So this is more than enough for us to make, to have significance, to say the correction is due to end and is literally made a big down bar the same day, right? So now we've got price, time, momentum, and pattern. But let's just do one more, which can be really, really helpful to see, is the 100%. So we're going to measure this low to this high and project it from this low. And the key ratio, I know we've got a lot of lines on the chart, but I will emphasize it. I will just make it, actually, well, we can see it's only 2 lines now, this here. So now, this is really significant. Like, this second one is very, very significant. It will indicate to us where it's likely, so we can even turn these ones off, is likely to end, right? Because it's almost like a confirmation, the 100% alternate time projection, what do they call it in TradingView? TradingView calls it trend-based fib time. Trend-based fib time, you can see it's a very tight zone where we've got a tight price zone, a tight time zone, and is literally responded in kind on that day. How cool is that, right? That is just amazing, but is really reliable. So now we've got pattern. So let's just summarize. We've got a 1, 2, 3, 4, 5, A, B, C. Pattern. We've got momentum down here, which is the next bearish reversal. We've got price, a very significant price zone with 3 clusters. So we've got price, and now we've got time. There are some other elements of time as well, but we've got 4 technical factors. So now, especially when they line up, you can then make a high probability decision based on that information. So just like the Rubik's Cube, when you are on the last layer, you can see this last layer is jumbled up. Well, then we just need to complete the last layer. So we look at the top, and there's a few different ways of doing this, and this is a particular algorithm. And there you go. We finished the Rubik's Cube. 5 steps done. World's most impossible puzzle, but there's logic to the madness. And trading is very similar. It can be very confusing, especially with all the noise out there. But we want to have a logical, objective manner of reading the markets like a pro. So the last step when it comes to trading is your business plan. It's trade management. It's risk management. It's your entry strategy, your exit strategy, and to write it out in advance so you know what you're going to do when certain things unfold. So when I'm looking at Ethereum, we're shorting Ethereum, which means we're going short. So my business plan, we're already short on this already, is this. And we can summarize nicely on this in terms of what are the trade expectations and why. Like, why do we believe what's going to happen? And there should be logic to the answer. Like, why are you planning on that to happen based on probability? So we've got our analysis. We can actually delete these now. Like, this is not serving us no more. We can delete these. We can delete these. The pink box does its job over here. So I would also put a question mark here just to confirm that is not confirmed yet. But this to me now tells me my thinking in terms of what the market is likely to do. So now let's just play out ahead of time what is likely to occur based on the same information that we used, the same 4 steps in the beginning. So what we're going to do is just the way we've done the analysis for this ABC correction after a 5-wave move, we're going to do the same thing, but for this 5-wave move and anticipating a bigger ABC correction of some sort. So let's just quickly do that. Let's just start with the retracement, the price retracement. I'm just going to squeeze this in a bit more so we can see it. We're going to take this low to the high, Let's see if I can just peg it. And again, we want those three initial ratios, which is 50, 62, and 78.6%. Most typical, most common. But just notice how calm we are. We are in control. Especially when you're looking at a daily chart, there's only one new bar per day. So it means we've got time to do this. Even though it only takes minutes, we've got time to do this. So we don't need to be FOMOing, fear of missing out and just jumping in an erratic manner. So we've got our price. We got great. Now, we want to keep it high level for now. Let's just do some time analysis. And then we'll look at what pattern is likely to unfold. And then we can just write our business plan. And the business plan doesn't need to be like 10 pages. It literally could be 3 bullet points. So it's really, really clean. But this is the most typical correction. And then the next ratio is over here. But we just keep it to this right now. So I'm going to draw a pink box or a box. I don't know what color it will be. Yeah, it is pink. So what this is now is telling me, when I'm looking at this, is we've had the first move down, which looks impulsive. Now, corrections don't tend to finish in a 5-wave structure. So here we've got a 3-wave structure, right? These are like a 3-wave structure. So the first leg to the downside, what we call this, or what I like to label it as, is a wave 1 or A. It's more likely to be a wave 8, but it's a wave 1 or A. Let me just draw it like this. I'm going to put a question mark just because it hasn't been confirmed yet. And we'll actually change the color to green so it matches the higher degree wave count. Then the next move to the upside is a 2 or B. The reason why you're at 2 or B, 1 or A's and 2 or B's, they actually look the same. They look the same, they feel the same, they respond pretty much in the same fashion. It's more later on down the line, it will get confirmation of what it is. But what this is now telling me is, okay, if there's a wave of 1 or A, 2 or B, well, what follows the number 2? What letter follows B, right? A, B, C, or 1, 2, 3. So in other words, we are anticipating the business thesis or the thinking is because of the momentum, pattern, price, and time, which was our analysis, we are anticipating a follow through to the downside. So let's just do one more thing. Which is we're going to do the ABC price relationship. I'll show you what I mean by that, and then we'll wrap up on this. But is this making sense? Like, if you're liking today's content, like, subscribe, hit the bell notification. I want to help you make money and compound your way to financial freedom over a 5 to 10 year period. And being able to read the markets and making logical decisions is going to be a big game changer for you. So what we're going to do next, and pretty much the last thing, well, actually 2 more things actually, because we want to project into advance what's very likely to occur, at least as a minimum, is we're going to measure this price movement to the downside and project it from over here. And then we'll see what the minimum price action that we're expecting. That'll be more than enough. We'll also measure how many days did it take for this 5-wave structure to unfold on the downside. And then we'll project that forward as well. And that will give us a bit of an indicative feel of the minimum price and time that we can anticipate ahead of time for Ethereum if this occurs. So let's just do that. Let's just do it from this point here. We're going to measure the beginning to the end of wave 1 or 8, or the 5-wave move to the downside, and we're going to project it from the peak. And you can see it's really close to that 50% price. So we're talking about $1,600 thereabouts, $1,655 with Ethereum. And then we'll just measure how many days did it take. So it took around 1, 2, 3, 4, 5, 6, 7, 8, 9, around 10 days. So we can anticipate as a minimum that we might have another 10 days from that peak, which is all the way down there. So it just tells us as a minimum we should anticipate until the 16th of May. So we're talking about, another 8 days or so? 8 days or so that we can go, this is the minimum that we are anticipating. I also like to do one last thing. I'll do it like this. It's a nice, cool, it's not a trick, but it's kind of like a little cheat sheet. Is we can look at ratios, and the typical maximum of the next low is something called a high to low time ratio. In other words, I've got courses that teaches this in a lot more depth, but is this high to high, and if we project this amount of time into the future, that typically is the maximum time for the next low it's going to be relatively significant. So we can just project that, and it just helps us see in advance in a logical, non-emotional way of where the next high to low ratio is. And the reason I wanted to do that is now we've got a typical minimum. So now the business plan is, if we just summarize, if I just bring it all in and bring it all together, the 5 steps. So we've got the 5 steps. Don't reinvent the wheel. We've got double time frame momentum. We've got Elliott wave pattern. We've got Fibonacci price reversal zones. We've got time reversal zones. And now we're on the business plan side of things. Trade management, risk management, entry to exit. By the way, in my link below, somewhere we've been working on a few new things. You can actually download my trade plan for free, which is just goes into this in a lot more depth. That just goes into double time frame momentum, the thinking, the entry strategies, the exit strategies. You can have this for free. It'll just help you put a plan together. One of my mentors said, Jagir, a trade plan will not guarantee success. However, the lack of one will guarantee failure. So you always want to have a plan as your macro business plan, but then every trade that you're doing, you want to have an independent plan so you know exactly what you're going to do. So it's almost, if this happens, then I'm going to do that. If this happens, then I'll do that. And this is how I manage my positions. So it's very, very easy and logical. So let's just summarize on this now. We've got our business analysis, which is a 1, 2, 3, 4, 5. And is, we said there's a high probability of 5. We've had this 1, 2, 3, 4, 5 on a lower degree wave count with an ABC. And what the business plan is, we are expecting as a minimum for the price to get into this zone over the next 10 days. The 2 dates are the 16th to the 26th. Is that correct? It is, yep. 16th is quite a wide time zone. And the price zone is $1,655 to $1,600 thereabouts. But the more bigger degree correction would be even longer than that. So we need to reevaluate because sometimes corrections can unfold in certain ways. And what we might end up seeing, well, there's a few different things. But the main thing, the immediate thing is this high is likely to hold, and we're likely to get a follow through as a minimum to the downside. And the main thing I want you to take away from today is the fact that it was logical. There was reasoning to our decision making, and there was no emotion involved. It was very mechanical, very objective, very professional. And that's what we want to be able to do. Sometimes it hurts my head to listen to people to speak about some of this stuff, and it's very emotion based. And I get it, right? Money is an emotional subject for most, and it's hard. But if we can learn these things, it can make a massive, massive difference. So if you got value from today, more not only from the position of Ethereum, but what you should be looking to do with all markets, all time frames. Now, not all positions or currencies, cryptocurrencies, or any asset is going to be as clear as this. These are really nice, clean, crisp Elliott wave counts. And sometimes it's really clear around 40 to 60% of the time. And sometimes it's just not clear. And if it's not clear, when we're looking at the 5 steps, what you may find is that the momentum is really clear, the pattern is not clear, there's some clear fib time and price zones, so you've got 3 out of the 4 technical things that are giving you the information, and then you have to make a decision based on that. It's either I stand aside and I wait for a better setup on the same asset or on another asset, or you go, this is enough, and this is where your trade plan comes in, and if you have it in advance, your rule set of even considering a trade, that will serve you long term. And other times you may find that the pattern is clear, the momentum is not quite lining up, but there's price, the time is not quite lining up, and you go, okay, there's 2 out of 4. What does your trade plan say? Can you consider this trade? I would always consider a minimum of 3. I like it to have this as a minimum because this can be really reliable, very, very helpful. Not perfect, but helpful. But it's a holistic viewpoint. We got 4 things we're looking at, not just one thing. And the 4 things together, sometimes the momentum helps us see the pattern position. And sometimes the pattern position helps us see the relationships on the fib ratios as well. So there you have it. There's my take on Ethereum, but more so the method behind the madness. So we're going to finish on this. It's a quote. The trend is your friend. Ride it until its end, until it reaches its bend. The logical, practical part of that is the trend is your friend. 5 waves, ride it until its end, until it reaches its bend, and now the trend is down. We've had this big movement down, so now the friend is on the downside, and we're going to ride it until its end, at least to there. It might even go into this zone over here, and then if we see an end of a correction, well, guess what we're going to do? Well, then we're going to anticipate a continuation to the upside, and what we're going to do, the trend is your friend, ride it until its end, until it reaches its bend. Like, subscribe, hit the bell notification, and I'll see you soon.